The UK economy is starting to flow. Lucas de Santos, BMI Research. Macron and Le Pen have made it through to the final runoff in the French elections. How do you expect the markets to react to this? Or was this outcome already factored in?
Right, so it didn't seem like this was factored in. It's most evident in bond market, where you saw a spread of French over German, Dutch, and other core bonds really having risen sharply in the past few months. So what we're seeing today is kind of a broad-based rally in risk assets. So Eurozone stocks are flying. Euro is also doing quite well, and the yield spreads are narrowing pretty sharply. So with the Eurozone election season now pretty much behind us, I mean, the Dutch election has passed in a relatively favorable manner. French election, now we assign a very high probability to Macron winning, and we don't really see too many risks associated with the upcoming German election. So we do see some room for this kind of risk-on environment to continue, especially given the fact that Eurozone economic data has been so strong recently. One thing we're watching or curious on is the rally in the euro and the fading of tail risks associated with the election, whether this influences the ECB at all. The ECB meets this week, and we don't expect any change in policy. What we're more interested in is gauging the tone that Draghi conveys. We still think that he's going to want to come off as sounding somewhat dovish. He doesn't want interest rate expectations to get ahead of themselves. So that's our core view right now, but we're watching that in the week ahead.
Theresa May announced a snap election last week, and with several data releases coming from the UK this week, such as GfK, consumer confidence, what does this week look like for the pound?
Well, yeah, one thing that's pretty clear across a variety of indicators is that the UK economy is finally starting to slow. This is after proving quite resilient after the referendum last year. And the main source of weakness right now is in the consumer sector, where we saw retail sales a very sharp quarterly decline from data released last week. And what we saw, earlier in the year was a kind of a divergence between consumer confidence and retail sales. So consumer confidence was edging down, retail sales are still going up, and now those are starting to kind of convene to the downside. That said, we still do like the pound. We still believe it's bottomed. It saw a pretty healthy rally after the announcement of a snap election, and this reflects the fact that the Conservatives look likely to win an overwhelming majority, actually increase their majority in Parliament. And the reason this is bullish is, we think, because it will strengthen their hand in the Brexit negotiations, and it decreases the likelihood that they will come out of it with a no-deal situation. So, for example, it decreases the likelihood that the UK Parliament could shoot down the final deal, which would be the worst-case scenario. But for the pound, with the election a little less than a month away, and there are certain key uncertainties with regards to the vote, we do think the pound probably will wait to take another big leg higher until after the election result is confirmed.
The dollar struggled last week amongst mounting tensions surrounding North Korea. How do you expect the US dollar to perform going forward?
Well, the dollar suffered as exuberant kind of expectations for growth, infrastructure spending, tax cuts kind of came down, and we think that's justified. Since the election, we as a research house have been saying that Trump would have a lot of difficulty getting his agenda passed, and what we've seen now is the dollar taking a hit as kind of the wider market is coming around to the same conclusion. That said, we do note that various Fed officials appear to be signaling that the Fed is kind of willing to overlook volatility and growth. Obviously, the Q1 numbers don't look too great for the U.S. economy, but the Fed does still seem intent on continuing its gradual hiking path. So in that sense, we would be watching if kind of rate expectations in the U.S. become too bearish and potentially could lead to an opportunity for going long dollar.
Thank you, Lucas, for your expert views. This was The Week Ahead with myself, Jack Everett. Be sure to stay with us throughout the week for much more.